a more sustainable U.S. economy in the future. New Zealand dollar, very similar level. Very, very similar level. Same extensions trade. I mean, exact same extensions. These things don't happen by chance. Finally, gold. So in a daily trend, we have traded the next extension long at 1573s. They target 2085s. Above 1491s, 2085s are the target. It'll be very important in gold over the next few weeks and into December to see how seasonally it reacts at the 1727 level. Going into the end of the year, gold is traditionally bullish. It usually has around a $100 to $200 rally in the past. You can see here. We had a nice rally through October, November into a top in the first week of December, bottomed out in February, and then we continued on. Again, we rallied continually into the end of the year, into December, first week of December here. Again, right here at the top, December 7th high, December 3rd high, before we fell back down $100. We're rallying again, potentially, into I would love to see gold rally up into some big top into December, even at the 12. If we did a $400 rally into a top in December, and we reverse at the 1285s, there's a very good chance that gold has hit its final capitulation top. Now, there's nothing saying that it hasn't hit a top already, but we need to see the shorts, the 50% shorts, tested and held. So we are we're bullish above, bearish below 1491s, but if we can stay below 1772s, we'll target 1441s or even 1300s, and those two levels have the potential to break a major daily and weekly uptrend in gold. So far, levels are holding that suggest more upside is coming, but that doesn't mean sell the house and buy gold here. It is a tough, I have to admit, it's a very hard instrument to buy right now, because nobody, and I repeat, nobody can stomach a $200 round trip move in gold, which it has the ability to do very quickly. I mean, we dropped off $400 from the year highs to lows now, which is just it's just unbelievably remarkable to me, that type of move. So in Thinkorswim, basically, I want to take a look at the euro and what we've been trading lately and why we've been getting long versus short over the last few days. So we had a nice, we had been selling a series of, and I will get rid of all these drawings and I'll show you why we've been selling what we have. So we have had a great series of measured move shorts that have moved from entries to targets, entry to targets, and the next move in the series was from entry high to target lows. And that comes in at the 134.20 level. Now, I'll move back down to a 15-minute chart here. So in the 15-minute time frame, we were trying to buy the halfway back. We took it to target at the 133.60s, 50s rather. It then held in all the way halfway back at the 142.60s, which has the 142.20 targets. So we effectively were able to get long at the 60s, looking for a nice target that is also a big continuation short level at the 134.20. So I don't really have much inclination to sell this market before then. We are holding along from 132.60s with nearly 100 pips on the table now. So I'd really like to see us, really like to see the euro rally now into the 134.20s, where we will reverse short here. But until then, longs are holding, and from today's lows to highs, we're bullish above, bearish below 133.10. So we may look to actually trail stops here soon, but in theory, we are in a free trade looking for 140.34.20. So that's what we're looking at in the euro. We're looking for the completion of the long we are in, which is into the continuation short for downsides, and we will take that short if it trades. Very similar levels in the Aussie trading. In the Australian dollar, it traded its halfway back, hits targets, but it does have a 96.90 or 897, really the figure, continuation short level that would look for 92 lows. The S&P 500, and this is the ES, the continuous contract for the S&P 500. Just let me remove some of these let me remove study here so we can see things better. Okay. Now I've been okay. The S&P 500, we have been talking about those the 1224 sell. Which is a fib drawn from the 1373 half highs to those original 1077 lows. It would have considered halfway back short. It traded 1225s traded, which leaves us with the target at the 1008s below. It has traded. It traded, and we have broken down. We printed new lows, and the only level of resistance that should keep us continuing down now, where we're sitting, is a fib drawn from the entry high to new lows at the 1150s. And the 1150s are where we're going to watch for sellers to come in. If we can hold that level, really hold below 1170, which would be the invalidation, we have a target at 1030s, which should help us into the 1000 targets. Now I want to go down to a 15-minute chart so we can look at the most recent trend. The S&P 500, yesterday from its lows to highs, it never held a nice pullback. It was very dirty. But the targets for that pullback remain valid if you go to new highs, and we blew through the targets. After hours, from Tuesday's highs to highs, we had a target of 1125 so long as we stayed above 1105, and the 1108s was the entry. It traded. We traded to target, going same anchor because it's an extension to new highs. 1110s or 1111s rather were the buy this morning with a 1131 target, while above 1107s. It traded, went to targets. We have now blown through targets. So from the original, from the entry, from the high before the breakout to new highs, we have the same situation as yesterday, where if we hold above the 1133s, which is a buy, we have 1145 targets with 11 invalidation below 1130, which this 1145 target helps us into the larger short. We would look for the short to hold, the next extension long to fail, and then we failed the uptrend in this leg into a big daily short, which should confirm our targets below at 1100 or 1008 and 1030. So that's all I have for you guys today. I hope you've enjoyed the video. We will be getting back to some sense of normality here with the site, but I will be back with you as price action develops.